Uh, uh. Uh, uh. Right. Good morning. Good morning. Today is Monday, the 4th. And let's go ahead and get into it. Let's see. Check something. Okay, so we have no news today. Nothing crazy, so gotta start remembering to check that. Let's go ahead and see what price action. So just off that weekly outlook we had yesterday, we know that what's transpiring right now is just bounce off of this 4-hour consolidation. And then we have the 1-hour price action that we're doing right now, which would be this. So we took out this high, creating this inversion here now. So hourly. So now that we have this, let's see how price plays off here at the open. We got 10 minutes left to the open. Price already went for the high. So now that it went for the high, price can be looking to go for a low. It can be this low, it can be this low. But since we have a new range and this high is taken out, let's see if price falls back into this range or do we keep expanding, because now we're inside of this hourly consolidation here. There. So this is where we're at right now with price. So I just want to see how it opens. right? Now let's go down to a 15-minute. It makes sense of what's going on. And for right now, I want to have this only on this chart, no sync. And no sync. That way this chart can stay clean. And then using this chart as higher time frame. I don't know what happened with that. That's crazy. Okay. Okay, we looking good now. Okay, cool. I was wondering, I'm like, dang, nobody in here yet. And then luckily I seen the new mention because last week for some reason I wasn't getting notifications, but finding out it was a bug with Discord, so I had to update it. So we should be good now. Okay, cool. We just waiting for the market to open right up. So let me go over what I just was talking about then before. Let me go over it before the market opens. So basically what I was saying is we had that weekly outlook for yesterday. All the links said no access thought. No, I don't know what that was. Nah, never that. It's lifetime. Nah, never that. Okay, let me go over this before. Oh dang, I sound low. Dog, what is going on today?
Okay. First, unlock your phone.
What's she saying? Okay, if I sound low, it might be your volume. I got it turned up. Let me see. Yeah, it's not saying that I'm low at all. Okay, cool. Okay, so let me go over this. So from the weekly outlook yesterday, we had it so we went down from the weekly. If you guys missed it, I will go recap that sometime today. But we got to the conclusion that we had this consolidation that we were focused on the 4 hour, and that this midpoint of this wick, the swing low wick. So we're pushing off of that now, and then based off of that 4 hour consolidation that we have with this push up, we have determined that this is the price action that we're looking at right now on the hour off that 4 hour consolidation, which will be this. So we're inside of, well, this imbalance last night, we had it to where it was just a regular CIBI, but now it has become inverted with the body of the candles closing above it. But now we're falling inside of this 1 hour consolidation above the Asian range high. Asian range low is still intact, but it is inside of a discount inside of this range. And now, since we have this breakout of this range, price could be seeking swing lows. So from this consolidation, we could push to the downside, targeting swing lows, falling back into a discount. But that's just what we're anticipating. When the market opens, we can get volume pushing up, and all the plans can change. You just got to be able to adjust. So right now, we're just waiting to see if we need to adjust and how. So just waiting for the market to open, get that initial volume, and then let's get it. So I got everything on the higher time frame on this side, and I kept this chart clean because I want this to be fresh price action, and just kind of, and I don't like my chart too messy, so try to keep this chart over here clean as possible. And I'll drop down to a lower time frame once the market opens, and it gives us some nice pushes up and down. Boom. So there's that market open. Let's see how the market opens. And you see this, like the chart, it's like a two-tone. That color, that like the whitish color, is the opening to the close of the actual stock market. And then everything else is overnight. So the gray is overnight. So right now, market open. We're getting this volume push inside of this 1 hour consolidation. So we could follow along on the 15-minute just so you guys can get a couple ideas. So I'm gonna just follow along on the 15-minute with this bias here. I'm trying to keep everything that I do on this chart over here because I don't want it to get put on this chart and then have more lines on here. I want to keep this clean, or keep the charts clean. So let's see. So obviously we have this consolidation right here on the 15-minute. So let's go make sure this stays on this chart. So we have this consolidation here. Right. So let's 15-minute. And then from here, we have this push up. If price makes a swing high here, and then we start to push to the downside, I want you to look at it and see what our current, if this made a swing high here, so this candle was like this, and this the very next candle closed, and it was closing lower than this candle, and it created a swing high. I want you to look at it for a couple seconds and determine which swing high and swing low we use to have a 15-minute dealing range. I will mark it up, but I want you to see if you can see it first. Give you a couple seconds. Okay. So if this would have made a swing high here, like this candle would have closed and we had the next candle close here, I wouldn't go from this low to this high. You would go from this low to that high because this is the low inside of this imbalance. Remember, I was telling you guys about the sweep inside of an imbalance here. So for me, that would be a sweep there. And then you will have it from this low to whatever high it makes. And then eventually, once that swing high is made, then it'll be wherever it stops at on the 15-minute. And then from there, you can dictate how price should play out. Or because you don't want to look at the market from one dimension, and you don't have to look at it. And what I mean by that, you don't have to look at it from just one perspective. Like, I can be somebody that's waiting on the 15-minute for a 5-minute trade, but you're waiting for the 15-minute to set up for your 5-minute or 3-minute entry. Or you can use the 15-minute as strictly directional bias, like how you look at a 1 hour or a 4 hour, and then go down to a 3 or 1 minute and then use that as your entry. But you're only going to have so much wiggle room. But if you use a 15-minute as your directional bias, well, when this low was taken here, your bias at this moment of time can be bullish until what? This high is taken. And then once this high is taken, prices just expanding out. But you don't have enough price action here to help you with directional bias, but you do have this 15-minute consolidation that we broke above. And then we continue. So you can use the 15-minute as a higher time frame if you know what to look for, because the 15-minute gives you the framework. So from here, let's go down to a 3-minute. See what's happening down here. So just looking at the 3-minute, let's see what transpired so far. So we had this consolidation here above these highs here, relative equal highs here. All these highs are pretty much the same. So that's why this liquidity is going up, taking out all these highs. You have price push up here, this push up here, this consolidation, we broke down. And then from here, you had this taken out, high here. So yeah, price is not giving anything clean as of yet. So want to wait and see. See how it plays out. Just wait for this volume to settle. We already inside of this hourly consolidation, so just wait for this volume to settle. Remember, this is that initial volume off the market open. So yes, you could get a lot of volume to the upside, but for the most part, your focus is just waiting for a proper setup, and then on that setup, take your setup and then you trade. Our all-time high is what it was, 23,840. Wait, in 840s. So that's a long ways back up. So you want to let price do what it needs to do, and then from there we attack. But no need to rush. And then you see also we have price going up. Since price has took out this high inside of this range here, and we're starting to run up and we're passing this consolidation here, you do have this SIBI right here that price could be headed to. And right inside of this SIBI, you have this high sitting right here, which we can take out, but which we're going to take out right now. It's already headed there. But you look at the high, that's one thing. You obviously see the high. But my focus when it comes to like stuff like this, looking at highs and lows, I focus on the midpoint instead, because for me, I already can see price going to the high, but I want to see how it reacts to the midpoint as it's going to the high, because that can be confluenced to see if price wants to stall off or it wants to continue. And this at this point right now, it's showing that it wants to continue, but this is the midpoint. This is still a 15-minute candle. This is an hourly candle, so we have 22 minutes until this candle closes. And let's see, do we have a lower time frame midpoint we can use? Yes, this one. So instead, I would use this one. And the reason I would use this one over the hour is because I can get a faster response with this 15 minutes instead of waiting a whole hour for this to play out. And they're in the same area. So keep that there. Because all you're doing now is just finding key areas where price can have problems, complications, anything. And then from there, you just keep it rolling. So like even this trade right here, that push up, if you are looking for something like this, then that means you will be looking for a low to get taken out. So with this push, your opportunity would have been somewhere inside of here on this push down, taking out this low. So if you focus on this low, right? Like I said, I'm not looking for a trade at the opening. So I'm not trying to seek something as the price opens. But is it possible? Yes, 100%. So look inside of here. And you got this push down. This low is taken out. You have this inversion here. And then once you have this inversion here, you have this confirmation here. But look, price goes and takes out the initial stop loss with this push down. But once it pushes down, this push down still doesn't take out this low. So then what happens? You still have this inversion here. And then once price touches it, comes back up and then pushes back down, well, your initial stop loss at that moment of time would have been here. So price sweeps that for how many points? Let's see. So initial stop loss. So that is 13 points. So now 13 points would have you would have been aiming for. If let's say if this was your entry here, then the only high that you have to aim for at that moment of time would have been these relative equal highs, which would have been this at the time. So that's 19 points. So a 1 or 2 is all the way up here. So this trade wouldn't have played out for you because of the distance or range that's only giving you. You want a nice, decent trade. So now, with this same opportunity, does the lower time frame offer a better setup? So then you go 1 minute and look and see, did it offer a better opportunity? Well, you had this push down because your focus is this low here. So when this push down happened on this price leg, your lowest SIBI that became inverted would have been this one. And it became inverted here. So now, once it becomes inverted here, you have this candle right here that breaks above. And then this one is your confirmation as well. So this is your initial stop loss on the 1 minute. So boom, 3 minute initial stop loss, 1 minute initial stop loss. And then your entry would have been this confirmation here. And this is the reason for that cushion that you always are looking for when it comes to confirmation. because now if this is your opportunity, you're aiming for the equal highs, which would have been this high right here, the highest point of all the highs. So it would have been this one. Actually, been this one. Well, these are equal anyway. This one and that one. So that's 27 points. Let's call it 28 points. So now this is a 1 to 2. So a 1 to 2 is here. So with the 1 to 2, it would have just barely not got stopped out and then pushed up, and then gave that push up to the upside there. And then look, it's not even giving you a 1 to 3. So you would have went for a 1 to 2, which would have been here. And this would have spooked you for sure. But stop loss is stop loss. If it don't get hit, it don't get hit. If it get hit, it get hit. And that's all based off the risk that you are accepting. Okay, so now let's go back current. 15. Okay, we got 2 minutes of this candle closes, and we are well above that midpoint, taking out that high. Okay, this 15-minute candle is about to close. Seconds. If price wants to run back up after this break, look at this consolidation as well here. I've been eyeballing it. So right here. Just finding key areas. That close. Now, let's say you believe that price can get to this point. Well, you will look for current price action that'll get you in line with getting up to that consolidation. From there, well, remember that price can go to these SIBs as well and have complications with continuing up. But so far, it's remaining bullish. Just looking at price action for what it is, not trying to put too much on it when it comes to like what it should do. Just more or less like waiting for the right opportunity. So now let's go see. Since we have that, price is still bullish. Let's look at the 1 minute. So even here, you have price pushing up from here. Let's see. Anything to anchor it onto yet. It's price steady pushing up. Nothing yet. You can follow the 1 minute as it pushes up from here. Get in sync with it. Let's see. We know this is the 15-minute midpoint. This is that consolidation. Below here, we got this consolidation here. So we got a good area to help us navigate on a lower time frame. Good areas of interest. because that's all you're looking for. Your focus on is how can I navigate price. Well, find key areas in which you can see things or signatures and price happen, and then from there you can map it out based off what you see on the lower time frame. Let's go to the 15-minute on this chart. Let it play out. At the 1 minute, it can give us a nice pullback into one of these. This is here or here, and then it creates liquidity there, and then it creates a new range. So just wait to see if we get a nice pullback. Not a heavy pullback, just a nice one. Okay, let's see if it starts to run down. Still to take out any imbalance yet. Let's see, did it get this one? Just barely. What is this low? 198.50. This low is 198.25. One tick. So we did go for this high. This is us nitpicking right now, just off the expansion. So definitely keep that in mind. So see if price goes for this low. no trades yet. So now we're getting a little pullback. Let's look at it for what's happening. So see where it falls up. So we have now just taking out that. That'll be our liquidity right now in a 5-minute. And then if this makes a swing low, then we'll see. Let's see 3-minute. And actually wait for it on 3-minute. See how this candle closed to create a range. Okay, so there's that range here. So let's see if price goes back into a discount before pushing to the upside. I don't think it will. Just from how it's pushing right now, we'll see. So it's this right here. You got one there and here. This, and this was down here. This is 3 minute here. And then you see you have that consolidation on 3 minute that we're breaking above here. see how we're in a range now. So now that you have the range, you're seeing where price is at. You just need to wait for it to get to the right spot. And we do have this right there. Where it can potentially go. So there's a stop loss there. And if you measure it out from here to this high, it's 37 points. So 1 and 3 will be here. Like that. But see if a continuation. It's 12 points, so you will even go like here. Let that play out there, but see how price plays out. See how price treats this imbalance here. Goes above it. Remember, that was this. But even with this type of trade, just seeing price continue to the upside, take out these highs, and then come to this consolidation here. Look at that. Really tapped it. So something like that. See price like that, then you go ahead and you just break even, and then let it rock out. Just because it's in a smaller range, and you can have one just crazy candle that pulls to the downside. And that's why you break even. Boom. This will be a break even trade. Now let's see if it still plays out. So break even trade. See how it plays out. Price starting to push to the downside out of this premium. So see how we seen that potential buy to the upside. Price gave a 1 to 3 to this high. It went to like a 1 to 1 and then it dropped to the downside. That's why it's important to know what range that you're in, because even with you looking for something and it's not playing out, if you're in the right area of interest, then you're able to dictate how price should play out based off what's happening in that range that you're in. They look to the right and look at the 15-minute, and we have this bitchy sitting right here. We have 30 minutes left to the stream, so let's see how price plays out. So we're waiting for one right now. We had one earlier. I'll show you it. So we had this one. At first, it was a 1 to 3. Price went down, pushed up, gave a little bit over 1 to 1 here, and then broke even. So break even was here, and then it came back, hit break even, and then now price is punching to the downside. So yeah, we're breaking below this one now. So we had this 15-minute range, consolidation range we had up here, seeing the price was going to go up to here, but we had this expansion this morning, and then price started to consolidate, give some started to slow down here. So we're looking to see if price is going to come here, but based off of this range, this is what we developed on the lower time frame. So we're still following higher time frame price, which is this 15-minute imbalance right here that we can bounce off of, continue up. But for the moment, this moment in time, price just sit inside of this range. now this can be that pushback up off that 15 minute. If this candle closes like this, so you have this inversion here, and then you can have confirmation coming up here. If this candle closes and price comes back into that, this can be it. We have to wait for the candle to close first. Okay, that candle closed, so now potential here. If price comes back down and gives you that, go into this consolidation here. I'm not targeting the high. I'm looking forward to go to this 15-minute consolidation. So that'll be 1 to 3 will be here. If it wanted to give that. Even with 40 points, you can go 13.25, or you can go just risk 20 points to go for 1 or 2. But it depends on, like, you got this one right here as well that's playing out. So now you have 2 of them. So with this one, it really depends. You want to see it go to the first one, but it may dig into this one and then push up. Like, go right into like a discount, like sweep into a discount and then push right up. And this is a 10-point risk. So that'll still be a 1 to 3, but not too heavy on that one playing out. Let's see. So that one would be here. So you can have 2 traps there, and then 1 there. And see how it's digging into that first one. And then you have the original one. Boom. So this is the original one we're talking about. Oh yeah, price running. Because 1 to 3 will be here, and then the 1 and 2 is here. So yeah, price runs to the downside. She digging into that 15-minute imbalance. So it's went to a premium, swept the high. Well, not even swept the high. Just made it equal high and then pushed to the downside. And then if you look at the 15-minute, we're just back and forth. So that's why when you're looking at a lower time frame like this, you want it to be in sync with the 15-minute. 15-minute is bullish until otherwise. So if you're trying to catch the falling knife, which is that sell, then you'll be frustrated with trying to catch anything. So you wait for the right opportunities. That's why you measure, you see things, and if it doesn't look super, super clean and you don't like it, then don't take it. And when it comes to risk too, like that risk was 10 points. And I think the other one was like 13, 14 points. That's not even a lot of points. So even if a trade doesn't play out, it still gives you the best opportunity because it gave you the least risk. And that's the main focus, is your risk management. Yeah, if you were taking the first, that'd have been okay. Because of the risk. The risk was the main thing. It would have been decent risk. So even if a trade didn't play out, you still had good risk. Yeah, a little bit. Yep. because it's a lower time frame, so you can see it playing out a lot faster. So your intuition of like, oh, I don't like this, or this is good, or this is kind of okay. Like you'll think about that quick, and then that'll determine if you want to close the trade, partial close the trade, cut off half, all that. Like even with us falling inside of this 15 minute, you don't automatically think the market is going to sell off, because what if it just falls into this 15-minute imbalance right here, and then pushes right to the upside? Then you frustrated because you feel like I jumped the gun. Like price is in this right now off the 15-minute here. So price can very much just catapult right up out of here if it wanted to. What time is it? Okay, so we got 20 minutes left to stream in. Let's go. And it's Monday, so you definitely have to put that into perspective. There's no need to rush it. Well, what it is you want to see you marking up price as it's flowing, and as you're marking up price and you're seeing different things play out and how the chart is playing. Like even with this trade, you can't see that trade like, man, it stopped me out. Everything went wrong. No, everything was right. You did everything the right way. You had a range. You had a model. It was a bullish model inside of a discount, and then price came back down to it and just went below it. But you can't look at it as like, oh, it failed, it didn't work. It didn't work because it had other things to do, and you're looking at the higher time frame. So 15 minute in this example, and the 15 minute had a different objective. So which one you gonna listen to more, the 15 minute or the 1 minute? So all that plays a part. So when I'm looking for a trade, that's why it's important to get in sync. Because once you're in sync and you're seeing 15-minute price action or 5-minute price action, and it's lining up with 1 minute price action, then that's helping you out because it's giving you a good bias. So on the right here, this is 15 minute, and then this is 1 minute. So for right now, we can remove these. And then the range that we're in now with this push down, because remember, this dealing range is off the 1 minute. So this range now would be here and then here until price breaks it and goes lower or pushes back above. But now we see if price wants to go back above, we can go back above 23,227, come back down, fall into a discount, and then continue up if it wants to continue bullish. But if this is the flip on the 15 minute, then you're getting in sync with what's going on and just waiting for the right opportunity. And let's even really quick go look at a 3 minute. So on the 3 minute here, you had this inversion here, right? This inversion, and then look, this confirmation here. So that 15 minute was giving you the punch to the downside with the initial stop loss here. But remember, market is bullish. So this will be counter trend trading. You will be going against what the market is showing. So that's like you looking for the big drop. And then what if the big drop doesn't happen? It could happen. But that's based off what price is doing right now. So then from here, even with this trade, that risk was 20 points bare minimum. So it looks about 20 points. let's say it's about 18, 20 points. And then with this, what would you be targeting? Well, you have this imbalance right here. So just to the imbalance would be a 1-to-1. And then below that, this is another 16, almost 20 points. So it'd be 1-to-2, but it would have to break this and go down to give you a nice push. Well, you have something in your way. So why would you just take that if you have something in your way blocking you from a clear path down? Even though you see the opportunity, you just want to make sure that everything's in line to take the right opportunity. So that's why it's important to make sure you're looking at different time frames that are in sync, in alignment for what you're looking for. Yes, sir. Because the market's gonna try to trick you all day. It's gonna make you think it's going one way, go the other way. And if you're only hyper focused on one time frame, then yeah, you can have possibilities there, but are they gonna be the ones you're looking for? Because even with this push down, and we just had this low right here taken out. Right here. If you look hard enough on the 3-minute, you'll see that we have imbalance right here on the 3-minute, real tiny. It's not inverted yet, but it's regular imbalance. So I can mark that up. Let's keep this on the 15-minute for right now. So I'll just say 15-minute only. Boom. So now this is right here. This is 3-minute. So if price wants to go back above, now look what we have. We have 3-minute imbalance that can become inverted. And then once it becomes inverted, it's bouncing off a 15-minute imbalance. Now, doesn't that help with your bias of being bullish? Well, now you have things that you need to wait for in order for that to happen. So you need a series of events to happen in order for you to get your trade. But you're flowing with the market until otherwise. So let's see, did this candle close above? I think it did. Nope, it didn't by a tad bit. This low is 23,215, and then this close is at 23,215.75, 215 even. So it closed above it by a tad bit. So technically, since it did close above it, this will be an inversion. Now, just because it's an inversion doesn't mean now we have opportunity. No, because we're still waiting for confirmation, which we don't have yet. Now, could you go to a lower time frame and get that confirmation early? Yeah, but the confirmation is to help us not take bad trades, because it's confirming the inversion. So even though we have this inversion now by a tad bit, we need confirmation, and look what price is doing. Price is dropping to the downside. So it's showing you that it doesn't want to go to the upside yet, and we're breaking this 15-minute consolidation. But look at the wick that we had with the last candle. So don't let this candle in the beginning fool you on what price you're trying to do. And remember that this is the opening to a fresh 1-hour candle. So that's why we're getting that initial volume in the beginning, because this is a fresh 1-hour candle. And then look what we got to the downside on this 1 hour. We got all this imbalance that we can potentially feel. So if you were looking for price to go to the downside, that wouldn't be wrong. But just remember that right now, currently, price is bullish until it flips. So now we have 14 minutes left on stream. I'll leave you guys to it. See how the last 13 minutes play out. Look at that big old rejection to the upside. And let's say you just trying to catch the sale, even though you seen it. Even though, let's say this did still drop. Let's say it did this and then it dropped. You don't think that that's going to play on your mindset that you were in a sale and then it just pulled back against you almost 20 points? Because you're trying to chase the trade. You don't need to chase anything. Wait for confirmation. Wait for things to confirm that it wants to do what you're looking for. And if it doesn't do it, then oh well. But that's the mindset you want to have when you're looking for your opportunities. You're not jumping to conclusion on anything. You don't need to. And to say it again, like I always say, you guys know I say every Monday, it's Monday. Like, you don't want to have that mindset going into Monday. You got all week. Just wait for the right opportunities. I would love to see price drop to the downside real hard if it lined up. But if it doesn't, oh well. Because remember, we still got this 3 minute here, this inversion here, and this confirmation here. So price still has to break above this. So now you get to a point where it's like, well, which one do I look for? Well, it's based off what you want to see. What are you looking for? What are you seeing in the market? What direction are you looking to go? Because if you're looking to go bullish or bearish, either way, all you have to do is get in sync with the right opportunity. The one that's showing fit the most. Oh yeah, for sure. For sure. All right, my guy. All right. We're gonna end it there, and I'll see you guys tomorrow.